You will get to know the 7 assets the rich buy, but the poor don't understand. You must watch this video till the end to know about all the assets and get a varied option to invest money and earn more. Now let's start. Number 1. Investment in rental properties and associated income. Investing in rental properties is a highly effective strategy for generating consistent cash flow through rental income. According to Pew Research, it's noteworthy that more than 72% of single-unit rental properties are owned by individual investors. It is common for investors to acquire properties situated in areas with strong demand and a positive rental market outlook. For optimal success, it is essential that the rental rates for these properties remain competitive, taking into account the property's features and aligning with current market conditions. It is essential for rental property investors to thoroughly analyze comparable properties within the same vicinity. It is essential to ensure that rental properties are properly maintained to attract and keep quality tenants. For those looking to streamline their investment experience, enlisting the services of a property management company or a qualified individual can be a prudent choice. Although this represents an additional expense, it provides investors with the opportunity to delegate daily operations to a professional, enabling them to concentrate on other priorities. Utilizing rent collection platforms can enhance the management of your rental property by automating the process of rental income, thereby ensuring timely collection of rent payments. Rental real estate is a highly sought-after asset class, providing investors with the chance to secure rental income over an extended duration. This form of passive income serves as an excellent strategy for generating consistent cash flow, and the rich understand this and invest in this asset class, but the poor don't know it. Individuals looking to invest should carefully plan their budget based on the rental income they expect to receive. This income can be allocated to cover the expenses associated with managing and maintaining the property, and in many instances, it can also assist in meeting mortgage obligations. Number 2. Real Estate Investment Trusts, REITs. Real estate investment trusts, REITs, provide individuals with the chance to diversify their investment portfolios across a variety of assets. There exist both publicly traded REITs and private REITs in the market. Publicly traded REITs can be accessed through online stock trading platforms, while private REITs provide accredited investors with opportunities through private platforms that present distinct offerings compared to their public counterparts. For those new to real estate investing, REITs offer a valuable opportunity to diversify your portfolio across various sectors, helping to achieve a well-balanced investment strategy. When assessing REITs, it is essential to take into account various factors, including the types of properties involved, residential, commercial, industrial, the level of geographical diversification, occupancy rates, and the potential for dividend yields. The regulations governing REITs are advantageous for investors, as they require that a significant portion of net income be distributed to them. Investing in REITs allows individuals to benefit from income-generating assets with minimal effort required on their part. Investing in REITs can be quite accessible, as you typically need only a minimum of $500 to $1,000 to open a brokerage account and begin your investment journey. Individuals considering REITs as a source of cash flow should ensure they understand the fundamentals of the real estate market and monitor market changes closely to make well-informed investment choices. Number 3. Investment in index funds. A prominent illustration of effective cash generation, which the rich engage in, is through index funds, which is discussed many times in interviews by Warren Buffett. Buffett has indicated that investing in index funds is a more cost-effective and superior option compared to investing in hedge funds, for instance. Index funds are managed with a passive approach and generally follow market trends, which allows them to deliver consistent dividend payments. Investing in index funds offers several key benefits for generating cash flow. It is a straightforward approach with relatively low fees involved. Additionally, achieving portfolio diversification is quite manageable, and the overall process remains uncomplicated. It is crucial for interested people to engage in comprehensive research and seek guidance from financial experts to choose index funds that are in line with their investment goals, risk appetite, and cash flow needs. Number 4. Stocks that pay dividends. Dividend-paying stocks appeal to investors as they offer consistent income through dividend distributions. By acquiring shares in dividend-paying companies, investors gain partial ownership of these enterprises. This ownership entitles them to a share of the profits, which are distributed periodically in the form of dividends. This approach appeals to investors as it allows for the generation of passive income, resulting in a consistent cash flow that demands minimal time and effort. Companies that regularly distribute dividends often demonstrate robust financial health and a strong dedication to their shareholders, making them an attractive option for long-term investment strategies. Number 5. Income exchange-traded funds. Income ETFs are effective assets for generating cash as they concentrate on securities that produce income. Income ETFs stand apart from traditional ETFs as they do not follow a specific index. Instead, they are crafted to serve as income-generating investment options for those seeking a reliable flow of income through dividends, interest payments, or distributions. Income ETFs encompass a variety of income-generating assets, including dividend-paying stocks, bonds, REITs, and additional investment vehicles. It is advisable for investors to diversify their portfolios by allocating funds across a range of income-generating assets to mitigate risk. Distributions to investors occur at predetermined intervals, contingent upon the specific structure of the ETF. For instance, exchange-traded funds that offer dividend yields typically distribute payments on a quarterly schedule, whereas interest payments might be issued on a monthly basis. Investors have the option to select an ETF that delivers income in a manner that suits their financial requirements, whether that is on a monthly, quarterly, or annual basis. Income ETFs provide reinvestment options, enabling investors to reinvest their dividends back into the fund to acquire additional shares. The objective here is to enhance financial advancement in the long run. Number 6. High-yield savings accounts. A high-yield savings account provides a reliable and consistent source of income, featuring interest rates that are considerably more favorable than those of a conventional savings account. High-yield savings accounts typically offer interest rates that significantly exceed the national average, making them an attractive option for individuals seeking to maximize returns on their cash holdings. A significant advantage of utilizing a high-yield savings account for cash flow is the ability for investors to access their funds promptly and without incurring penalties. High-yield savings accounts offer consistent interest payments and are generally considered a dependable choice, as they are frequently associated with well-established financial institutions. Automatic savings options are available, allowing investors to establish recurring transfers from their checking account to their savings account, thereby optimizing their cash flow over time. Number 7. Real estate debt funds. Real estate debt funds present a strategic investment opportunity for financing various real estate projects, frequently focusing on particular niches such as residential construction loans tailored for multifamily apartment buildings. These funds pool capital from various investors to offer short-term loans, typically ranging from 90 days to 18 months, utilizing the property as collateral. Now, if you want to know the traps that are keeping you poor, then watch the video appearing on the right side. In that video, you will get to know all such traps. Also, subscribe to our channel to know more amazing financial tips and strategies to get rich.